Hey everyone, before I get started this week, I want to highlight our upcoming webcast on September 14th when our CEO Hussam Naji will be joined by leading demographer Ken Gronbach. They will focus on how commercial real estate is being reshaped by the aging of the boomer generation and the coming of age of millennials. This affects every type of real estate and will hold profound implications for investor strategies. Visit our website, marcusmillichap.com, to register. Now, in follow-up to last week's video, I'm going to offer additional insights into our recent investor sentiment survey. As I mentioned in the last video, the survey was done in the first week of August, so the insights incorporate the numerous market forces affecting the sector, like low interest rates, the Delta variant of COVID, the labor shortage, and so on. This week's video focuses on the three property types that have outperformed during the pandemic: apartments, industrial, and self-storage. Investors expect apartment, industrial, and self-storage values to climb this year, driven by particularly strong demand as the economy recovers from the pandemic. None of these three property types took a direct hit from the pandemic. Perhaps apartments took a glancing blow due to the eviction moratorium and some leasing hurdles during the early stages of the pandemic, but overall, these properties didn't see a major setback, not like hotels or retail. Apartment properties generally sustained momentum through the health crisis, although demand for housing did migrate and shift a bit in favor of southern metros, suburban areas, and larger unit sizes. But apartments picked up a significant boost in the second quarter this year as lockdowns ended. People who lost work have found new jobs, and households have begun to debundle. Apartment absorption in the second quarter totaled about 218,000 units, a record level of leasing activity. That brought the national average vacancy rate down to 3.8%, despite record multifamily construction levels, and it delivered a 4.1% quarter-over-quarter rent gain. Investors remain very optimistic about the multifamily outlook, with 74% of survey participants expecting values to rise over the next year by an average of 6.7%. The market should remain active, with buyers outnumbering sellers, which will likely continue to put upward pressure on pricing. Industrial property demand got a boost from the pandemic as well, as local retailers began to focus on increasing their local just-in-case inventory and as the use of e-commerce grew rapidly. The industrial sector is in the middle of a significant development wave, with 325 million square feet expected this year. That's an inventory increase of almost 2%. This will be the fifth year of outsized construction deliveries, but vacancies remain tight at 5%, and rent growth picked up to 5.9% as of the second quarter. 74% of the surveyed investors anticipate average price growth of 7.4% in the next year. This will support an aggressive bid climate. Self-storage also got a boost from COVID as students left college and put their belongings in storage, people relocated, and also needed space at home to accommodate additional family members or a home office. Despite record construction levels that have lifted the total self-storage inventory by more than 20% in 5 years, vacancy rates have fallen to a record low 5.5% in the second quarter. Rent gains have also been aggressive, rising by 9.7% on a national basis in the last year. That brings the average rent back to the levels that were set in 2016 before the construction waves began to force softening rent levels. Self-storage investors anticipate a 6.3% gain in values in the next year as the recession-resistant nature of self-storage attracts investors new to the property type. Apartments, industrial properties, and self-storage all got a lift from the health crisis last year, and their momentum looks like it will carry into 2022. Favorable demographics, migration patterns, and behavior trends all point to the positive outlook for these property types. But as always, there are numerous factors that can change the outlook. Tax reform, the Delta variant, supply chain challenges, inflationary pressure, and the prospect of rising interest rates are all reasons investors need to keep their eyes on the horizon.